afternoon, everybody. New York Open, 1:30 p.m. Thursday. We had fairly bullish news part from core retail sales, which were 2%, 0.2% less than forecast and 1.2% less than previous. Everything else, though, is neutral slash bullish. And we had a displacement to the downside. So this line is the 1.5, 1.356 level. And this is the liquidity that we just took out yesterday. Wait, what was the trade we saw? Yeah, this was the trade we had. Yesterday we predicted this. Let's start from here. So we predicted this to happen. That was GU I was looking at earlier, but EU was the option of where I was looking for potential trades. So this was around 8:30 where we got the move. And this is the move. So we had London session taking out Asia highs, and then London lows were equal lows with Asia lows, and these equal lows got taken out. The price went down deeper. We went marked out this area, because these were short areas of bearishness. We have a series of bearish candles here, also known as an order block in this instance, also known as order flow. On the 3 minute, you can see this is the initiation, and you can see the series of black candles indicating the bearishness. If I zoom in, it'll be a bit clearer. As so. And then we finally see that bullishness over here. And what's interesting about this bullishness is that it creates equal lows with, not exactly equal highs over here, sorry, but it creates equal highs over here. So retail sees that as resistance. Bam, bam, bam. So this is what they draw right here. So they draw this, they see resistance, and there's also some up here. If we were to go to the daily time frame, you can see that there's also, wait, this red line is for the fair value gap, I believe, on a weekly, weekly time frame fair value gap. So this is a fair value gap. We have equal highs over here. We have equal highs over here and over here, right? So we have 1, 2 equal highs, and then 1, 2, 3, or 1, 2 equal highs. So we have 2 sections of equal highs. I think this is the first liquidity, this is the second. So we have a target, right? And it's also within the fair value gap. So it's a very strong target. We then also have the fact that during the New York session, we've taken out the equal lows here. We've come back down to institutional order flow, order block, whatever you want to call it. We've come back down to this place. And when you're bullish, price shouldn't really be going below these candles. It should be used as kind of where institutions get into the markets again. So we saw this and we're expecting institutions, right? If it's an institutional level, or institutions see this as a level they get in, we need a footprint of institutions to apply to signify that institutions do see this as a level. And they did. You can see here we get a big displacement taking out all of this. How do I know this is a big displacement? How do I know it's institutions? Well, I assume so. Why? Because when you compare the size of these two candles, which are the big part of the reason why this whole leg got taken out, which is a series of multiple candles, 1, 2, 3, 4, 5. You can count many, up to even 10, right? And it got taken out in what? Mainly 2 candles. So institutions are bigger, so they create bigger footprints, which means that they're there. So when you see this from the level, in alignment with the targets that we have, I was expecting price to displace and come back down. Now, when I drew, you can even go back to yesterday's stream, I was looking for price to return with the red arrow, return back into either this order block here or this series of bearishness here. I think on this little time frame, it's bearish. Yeah, it's bearishness. So it's the order block. So I was expecting price to come right to this candle open here, or price could come a bit deeper and go into one of these fair value gaps down here, right? So I wouldn't have used this one because price used here. I probably would have used this, or maybe even this one. And again, this is also lying in between this order block here. So it could have come down here or down here, but I would have accounted for either or in the trade I entered, right? So that was what I was expecting, but as you can see, price did not come back down as deep. And why was I not entering on, for example, this fair value gap or whatnot, is because this was below equilibrium. It was that optimal trade entry. So that's why I was waiting for it to come a bit deeper, but it didn't happen. And price just simply delivered all the way to our targets. And it went to our optimal target, which would have been the second area of liquidity. So that was the move that we weren't able to get into, but we had seen it come to pass. So we've now hit our targets. We've hit the fair value gap, taken out this liquidity. When you take buy side liquidity, normally price goes down. So on GU, we have it a little bit cleaner. We have this hourly time frame showcasing this bearish fair value gap right here. And you can see price nearly came up to this 1356 level. But on the daily time frame, obviously we have EU creating this lower low. So we actually have a divergence here. So we have this lower low that's been created, and then GU has created this higher high, right? So when you have that divergence, right, we're bullish on DXY as well. As you can see here, we come back down into this weekly fair value gap, expecting that retracement or rejection. So we are bearish and we have divergence. We have the fact that we've just taken buy side liquidity in one, and we could probably get rid of this because although this is liquidity, we've also taken liquidity up here, which is stronger. We've now had this institution getting involved. Why? Because I can see their footprint. This candlestick is a lot larger than the previous ones. So we have this area right here, and we've consolidated. London took out Asia highs. New York is continuing the London session idea. We had the major taking of that liquidity over here. Divergence. We're bullish on DXY. We're at the weekly fair value gap, expecting price to come up, or DXY to come up. We have this order block right here. So we'll be selling. There's this area here. You have multiple fair value gaps here that we want to fill, but you also have this institution order flow. You have to be careful. And then you also want to have, it here, and then displacement here, and then an order block here, and then of course fair value gaps here, order block here. It's basically the same thing. Order block, and within those order blocks is fair value gap. Order block, within that is fair value gap. Order block, to be fair, it's not really a fair value gap here, but there's a fair value gap just after. And that would be roughly what we're targeting. So that is my plan in terms of live trading. I'm expecting for price to go down. If I was to enter this, what time frame did I get? Or 15, isn't it? I don't think it'll be as cleanly as this. Or this is the alert I set when I was wanting to buy it. I don't think price will deliver this cleanly all the way here. I think it may deliver cleanly here, for example. But this is the overall target, taking partials at the areas I mentioned earlier. Only thing is that I would actually need is for price to come to our entry. So we're going to set an alert just above here. And remember, you always want to spend the most of your time on the daily time frame. Now, I don't like just buying and selling randomly. Oh, because I took buy sell liquidity, I'm going to sell. No, you need a confirmation, number one. But number two, just as importantly, it's not more importantly, is the consensus, the context. On the larger time frames, you can see we have bearish footprint. We then had an event and confirmation. We also have divergence, and we have DXY agreeing with the idea. We've been bullish for a while. It's just when we go up. Now we are seeing it. We then also have bullish news. So there's a lot of factors that are going into this one trade. I haven't traded for a while, right? But I've been prioritizing quality over quantity. Prior, I was prioritizing quantity. That's why I have all of these pairs on the side, because I wanted to see as many opportunities as possible. But what I realized is that in widening your horizon, you limit your accuracy. Not that you can't be accurate on multiple different pairs, or you can't get lucky, or you can get a series of wins. Of course you can. But the difficulty is that you lose a bit of precision when you have multiple targets. It's like being a sniper. The sniper is meant to shoot one bullet at one time, and therefore you have to have one target. If a sniper was tasked with taking out a battalion of 100 army members, right, 100 people or 100 enemies, how on earth is a sniper going to do that? It's going to be very difficult unless they're extremely far away or silenced, they're not next to each other. Because the moment you shoot the first person, first of all, it's going to be very loud. Second of all, if you hit your target, the others are going to be alerted, right? So it's going to be very difficult for a sniper to take out 100 people. So for the preciseness of a sniper, it has to have one target, and it has to be focused on it. Remember, the snipers are not really close range, so they're far away. But the far away is not that we're far away from the pair. It's just a sense, another analogy of focus. The fact that it's so far away means that we have to really stabilize ourselves. A sniper isn't running and shooting. It's not James Bond. That's different. A sniper is secure. They know what they're looking for. They're measuring the wind. They're measuring the distance. They have their scope. They have their vantage point. They have, normally they're laying down on the ground. they have the technique that they have applied. They're looking down the scope. A sniper really takes 2 seconds to take a shot. They are there for a while. They're looking at it from different angles, measuring it. They have different devices, tools to help them, right? So we're snipers, and snipers need to remain focused. And so, not that you can't have multiple targets. A sniper can take out multiple people, but my point is that when you have one target, it's easier. And even me, I'm not subject to not listening to this advice. In fact, I'm saying it because it's what I've learned from myself. I find focusing on one target is easier. The difficulty is that when you're focused on one target and there's no moves, there's no opportunities presenting themselves, it gets frustrated. You sometimes start seeing things differently. You start almost trying to find a trade when there's no trade. It's like trying to have a target in a sniper target, but there is nobody there, and so you're looking for somebody to shoot because you're like I've been set this target. I've been here for a while. What's going on? You're going to start looking at more people that don't need to be looked at. Why? Because your target is not there. When your target is there and you know what it looks like, and your target is right in front of you, you're only going to look at your target. But when your target is missing, you're going to start scanning everybody to see if they're your target. And sometimes we do that in the market where we have our strategy, but we don't see our strategy playing out. So we start looking for where maybe we've missed something. Maybe our strategy is this, and we start tweaking little things. We don't just flat out say, you know what, I'm going to become a retail trader now. I'm going to start trading supply and demand. No, but we'll do it subtly. We'll be like, oh, you know what? This looks like a Fair Value Gap. This looks like institution. This does look like this. But if you keep lying to yourself, the only person you're hurting is yourself and your bank account. So the best thing to do is 100% focus on one thing. The the easiest way to focus on the thing is to know what it is in and out. Focus on it. If you don't see it, you don't trade. And I think one of the best things you can do for yourself is to not only trade in your life, have other things. Um, and I'll tell you two strategies. One is to have a hobby slash distraction slash something else you can do, whether it be a job, whether it be another job, another business. It could be studying, it could be entertainment. I don't like entertainment too much because that can distract you too much. Something productive is good, I would recommend, right? Because I've also used entertainment. Sometimes I get too, like I was just watching a show and it made me start my stream late because I forgot to time myself rather than I forgot to set a timer rather than finish the episode. Because when I finished the episode, it was quarter to two, right? But I wanted to start my stream at 1:30, so that was why I was late because I was watching the show. Evidence, Netflix. I was watching The Mentalist, and I could see new episode started. I was like, wait, I'm meant to be trading. What's the time? And then I realized, oh, I'm late. So that's why I say something productive, something that doesn't really take away. Now, obviously, having a job or another job may actually also be worse than entertainment, that it takes you away for longer, but at least it's productive and it's serving you. So that's my advice to you. You can do that as you will. So, like I said, we're looking for price to come back here. Uh, it's plausible that it doesn't. Price has been very volatile. Like you can see, it didn't come back down at all. Just went straight up. There is a way to measure this in terms of that price isn't coming back so you can get in early, but it's difficult, and I don't have a correct, a nice system I can rely on for that manner, for that type of thing. So in that regard, it's a bit difficult. I don't have anything to consistently say, okay, now I know the markets are volatile. I can't say that for certain. But prices looks like it's volatile right now. I can kind of tell a little bit after the fact, sometimes when it's a bit too late. But yeah, I'll be selling. And we are technically bullish that we've created this high, this low, high, low, high. So having a target down here, I would need price to break this swing low here first. But yeah, this is me for now. I mean, I'll just keep on monitoring it. I do like GU for sales, only because it's closer to this Fair Value Gap over here. But I don't know if it wants to come back up all the way here. So we'll see. Cool. Now I'm getting my pen and paper. So, time to do the homework we set out to do before. So, how's the best way to do this? Maybe slides. So we are where, when, what's this font? It's not black. So as you can tell from what I've written down, that is the target and that is the session that we are going to do right now. So we're simply just going to find out whether or not, when the high or low forms in a bullish or a bearish week. So the way we're going to do this is we're going to go to a week. We're going to have I think we have an indicator that will help us to showcase when the days are. And then we're going to find out if it's bullish or bearish for that week, and then we're going to go back in time and follow through to see if during that week when the low was formed, what day it was formed, what session was formed, if we can go back that far. So we are going to start off by doing EU, systematically go backwards, maybe GU as well, and then the third one we may do randomizer, right? That will be done on Forex Replay. So the reason why I do that is because my back testing, you have to pay for a certain feature, premium feature, to go back in time to a certain extent. So we're going to start with EU. We're going to get a number. We're going to do 100 today, 100 in total. So hopefully we can do that. And I do want to show you, it's going to be a bit difficult to write it all down. I think I might write down the details and then I will, I don't know, but we're going to go with the flow. So first things first, let's create this. Since we've set the alert on EU, there's not really much for me to do. Just wait for price to come back up. What I need to make sure is that, yeah, this is fine. Right, so starting with EU, hiding this. We're gonna go for every week and press a vertical line. So Alt V. We're gonna do about 10, 3, 4, 5, 6, 7. Actually, no, we'll just do all of these where it has the markers, right? So when you do it on the weekly, the line actually goes to the start of the week. So today, let's not use this week. Actually, we can use this week. So this week we're bullish, okay? So today we are bullish. And this vertical line is where we started. Actually, we don't even need the vertical lines. The reason why we don't need it is because this indicator does it all for us. Hold on. Oh, that's not what I meant. Where's the thingy bar? I want to add a text box. Does it automatically go gray and aerial? That's so annoying. Why is it gray? Oh, this is going to vex me. Oh, that rubbish. No, we'll just do manually every time. It's fine. Oops. What? Oh, that's what this is. Okay, so this is Sunday, Monday. That's the start of the week. We had a bullish week, and the low was created Tuesday. Oh no, yeah, Monday. So the first one is EU, the week of 12th of July. So I'm writing this down on a piece of paper. So we're going to say week. Actually, let me create this as a table. So week, the 12th July 26. So we got date, time. We're going to say bullish or bearish. Direction. It was bullish. And then low or high day. And then we're going to say and then we'll call it session peak. So wait, can peak be used? This is what I know as. I was gonna say peak or trough. I didn't want to write that down, but or extreme could it means both. So session extreme. So okay. Pen sucks. The 12th is bullish. The session low is Monday. $16.15. That's like New York afternoon. Okay. So we've got the template now. So let's just keep going back in time. So bam. Ooh, that's kind of neutral. Wait, what? And let's just change it. This one. Yeah, this is fairly like it's bullish but neutral. Wait, why are we also going all the way back there? This is daily. I'm on the wrong time frame, that's why. So this is a bearish week. So we look for when the high formed. Okay, I see the issue. does it say T for Friday? That's what's throwing me off. Anyway, Sunday. This is bullish, I believe. Right? Bearish. Yo, something's going on. So we did 12th of July. So we did this week. So this week is bearish. So we need to, yeah, so we need to know where the high was formed, right? Yeah. This is bearish. When was the high formed? The high of this week was actually formed on the Friday the 10th. Oh no. Oh, something ain't right. It's the start of the week here. And the Friday ended here. Okay, so it's not this because that's the following week. Wait. No, it is here. That's fine. So this is the high. It's actually a Thursday, 10 p.m. Okay, go back to the weekly. Go to the week starting 29th of June. So right on 28th of June. The Sunday. And then the high. Wait, was it bullish or bearish? The week of bullishness. Just type that down. Then the red line's there, correct? Yep. So from Sunday, Monday, since it's bullish, we're looking for the low. Lowest point is here. It's on a Wednesday, so let's track it to Wednesday 1st of July. At 9 a.m. Okay. One, two. Okay, one, two, one, two. Okay. So we've done 3 so far. I don't know if I'm gonna do this electronically. Right, so we did 20th of June. So now we have the 21st of June. And we're bearish here. So let's go down to this time frame. Since we're bearish, we want the high, which is actually formed on the day itself, the day of open. It was from that Sunday 9. Which 9 though? The rough time is fine. 21st of June. We have the 14th of June now. Okay, and wait, was it bearish or bullish? It's bearish. Write that down. And the high, I think it's here, you know. Yeah. Again, it's on that Sunday itself. On 622. It's Monday, 1 a.m. Go the week before. This is Monday, 8th of June. So, right, 7th of June for Sunday open. And then this is bullish. Okay. And the low for that week. Monday 5. Week before. It's bearishness. How does that make sense? It was the 30th or 31st of June. May, sorry. 31st of May. So we're looking for the bearishness, the lowest, highest high, sorry. So the high right now we have at Monday 100. Okay. Let's check the live markets really quickly. Okay, it's come up to entry. 1 second. Just in case I need to top up. Okay, so we are bearish again. Let's go over why. First of all, I think the latest we've had is Thursday, but we could also sometimes have it on the Wednesday. But generally speaking, by Monday, we've established the lowest point or the highest point. So we can say this is the lowest it will go. The only thing is that based on that, we are bullish, but doesn't mean that we know it's gonna close. So I wouldn't actually put that much into this, despite me knowing. The only thing, that reason why we're bullish is that we're bullish, sure, but where until where? And it's here. We've hit the we've tagged in this area. We've also come into this kind of bullish candlestick. So there's that. This is a 15-minute time frame, I believe. I ideally would like to. Is my internet messing up, or is it? Let me check. Okay, it's working now. What? I think I forgot my password. me a second. Just loading up my broke card just in case I need to deposit anything. Okay. That's my old password. Okay, sorry, just doing something. Okay, what do I need to do again? I just signed in, that was it, right? Let me just get the deposit page ready. So if I need to, because it might not allow me to enter the amount I want to enter. Could come up higher. There's also this for running up here. So it could come up to this order block right here. Could also come up to this for value gap right here. Pip what? About 10 pips. Right. Time to enter. Euro USD. Something light, nothing crazy. 4672. I think it got just a little bit higher. Bam. Okay, we're in at 14574. Damn, I got a steep one. Let's go 50-minute time frame. Let's just get rid of this. I don't really know its liquidity. Get rid of this as well. Is that from yesterday? Cut. We're in this officially. What GU's doing? Not yet, the entry level. Okay, back to the homework now. So we made it to the 31st of May 2026. Which is this session here. We said we've already done that, so we can go the week before. Technically bullish. For the 24th of May. So since we're bullish here, we're looking for the low. Wednesday 2100. Okay, go to the 17th of May. Or the 18th, yeah. This is bearish. So looking for the high of the day. Monday 5. Wait, what 5 was it? Sorry. Yeah, Monday 1700. Okay. to the one before. Bearish. Look for the high. Again, another Monday for 1500. Sounds bullish. So looking for the low. For this, it'll be easier. Like this. So we are bullish, looking for the low. Right here. So this is 678, 674 is actually here. 1 o'clock. Which is another time frame I could do. Probably 6 a.m. for us. Okay. Bullish. Gonna do like this. Bullish, bearish. Bullish, bullish, bullish. Okay, go to the dates. Now we are on 26th of April. Oh, bullish, looking for the low. Thursday, double 100. bearish here for the high. Monday 1900. 12th, 13th. The rest are bullish, so we're looking for lows now. Lows actually formed. I just realized my thingy was to the side, so you probably couldn't hear me properly. But here we're bearish. The low was formed. So this one is 6647, 6638. So it's right here, which is 1900 Sunday. Wow, if I was talking like this, you probably could hear me, but I'll be quiet. Yeesh. Hopefully it's not too bad. Okay, next one. This is 5th of April. Five oh five two. 1800 Sunday. Okay. Very, very bullish. I'm gonna say very bull. Very, very bull. 29th of March. Low. Monday 900. It's like a doji. Okay, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So we've done 16 days. And of those 16 days, I'm going to go one by one. So on the 12th of July, 2026, we were bullish for the week. And the low was formed on Monday, 16:15, which would be like late New York session on the Monday. What's interesting is that just because you're bullish doesn't mean that there's... Anyway, 5th of July, 2026, we were bearish for the week. And the high was formed on Thursday, 10 p.m. On 20th of June, 2026, we were bullish. The low was formed Wednesday, 9 a.m. So that would be New York Open Wednesday. 21st of June, 2026, we were bearish. And the high of the day was Sunday, 9 p.m. That would be about... It's like Asia session, the first Asia session. 14th of June, 2026, we were bearish and created the high Monday, 1 o'clock, which is 6 a.m. GMT, roughly about 2 hours before New York London Open. 7th of June, we're bullish. The high was formed Monday 5, which is heavy into London, 10 a.m. It's actually at the end of London. 31st of May, 2026, we were bearish, and the high was formed Monday 0100, which is 6 a.m. London Open. So 2 hours before after that, 1 hour after that. 24th of May 2026 were bullish. The low was formed Wednesday 9 p.m. 17th of May were bearish. The high was formed Monday 5. 10th of May 2026 were bearish as well, and exact same time Monday 5. That is the end of the day, end of the trading day Monday, which would be heading into Asia session now. And it was very interesting that on both of those days were very bullish, and the trough was formed on the first trading day of the week, which being Monday. 3rd of May 2026, bullish. The low was formed 0100. 26th of April 2026 were bullish. Low was formed Thursday midnight, which would be 5 a.m. UK. 19th of April 2026, we are bearish, and the high was formed Monday 7 p.m. 12th of April 2026 were bullish. The low was formed Sunday 1700 or 1900, which is 7 p.m. and that would be midnight GMT, which is about 2 hours after open, basically. And what's interesting, we're very bullish. So on the 5th of April 2026, we're bullish for the day. The low was formed again Sunday 1800, which is 6 p.m., which is 1 hour after open. And then 29th of March 2026 were bullish. The low was from Monday 900. That was a doji. So I'm going to go on 21st of June. Right here. And I have it that the low was formed Sunday 1900, which is right here. And I want to know if that week was very bearish or not. I'd say it's just a solid bearishness. I wouldn't say it's very. I called this very, I called that very. 10th of May is very bearish. I've got that down already. What's this? 31st of May is very bearish. And that had the high formed Monday 6 a.m. GMT, so 1 a.m. New York. I would say the 15th or 14th, from 14th of June is very bearish. And that was also Monday. 12th of July was a Monday, but it was an evening session. So I'm going over the very bearish and very bullish examples. So on 14th of June, we were very bearish and we formed the high on Monday, 6 a.m. 31st of May, we are very bearish as well, and the exact same time, Monday, 1 a.m. 2 days in back-to-back, we are very bearish, and the high was formed Monday, 5 p.m. Here, we're very bullish, and this is 12th of April. We created the low on Sunday, 7 p.m., so we even get to the Monday. And then here, we're very, 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 very bullish, I put down, which is the 5th of April. I'm assuming it's this. No, this, sorry. Yep. That would be the low created at 6 p.m., literally 1 hour after open. So it had a very short time. Very short time it created this. Very early on in the week. And that was it. And then after that, it delivered upwards pretty cleanly. So the common factor I'm seeing is that when it's very bullish or bearish, we tend to create the high or the low latest Monday. We don't even get to Tuesday. A lot of the time it could be a Sunday, Monday thing where that's when the low is formed. So this is just direction. We're not going into, okay, how do we make money? Because don't forget, just because you have direction doesn't mean you're profitable. It just means you know where your targets are. And you can still lose money buying a bullish trend because it could be the pullback, it could be the retracement, or the reaction to a certain area. So you still have to have a good entry model. But a lot of times, for me personally, my biggest weakness, I think, has been the direction. So this is a small sample size. I know it's 16 days, which is 2 weeks worth, and we do have the data, but I do want to get to 100. So I'm going to do this a bit more. I might try get to 20, maybe 25. I need to eat though. I still haven't eaten yet. And then we can start looking at some specific. Let's just quickly check on our trade right now. Okay, we're getting that reaction, which is good. The first thing we want to do is take this out. So we're going to set an alert as it approaches this low. That's the first thing we need to take out. Then we can go from there. Okay, we'll be live for an hour. We'll do a couple more. Kind of hot. Also want to lay down. Hot, hungry, thirsty. So we go up to the 29th of March, which is that big gap we had. So 23rd of March. We're technically bearish. Large bull wick. So this is bearish. Weak direction. 23rd of March. Bullish. Okay. I can work these ones out actually. 15th, 8th, 1st, Feb. 25th, 18th, 11th, 4th, 28th. So does it go to the So it'll be the 31st or so it'll be 30th technically. November, January. Okay. Let me fill these out. So February 26, 26, 26. January. Okay. Do all the 25s. Okay. Now let's go through whether they're bullish or not. Bearish. Bear. Bull. Just doing this so I don't lose where I'm at. Bet. Bull. Actually, I think I should be able to bear. Bull. Bull. Bear. 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 Bull. Bear. Bull. 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 Bear. Bull. Bull. Okay, perfect. Let me finish these off. Bearish. Bullish. Bearish. Bullish. Bearish. Bullish. Bullish. Currently just writing them out, the direction of the weekly candlestick. Okay. Now going back to the 15th of March. Right here. Since we're bullish, the low was created Monday, 3 a.m. I say big bullish. It's a big bullish candle. And then let's actually widen it so it's a little bit. Big bullwick. And then go to the hourly. This is bearish at the high of the week. Tuesday, 1300. Very nice. Come back here, go to the weekly. This is a bearish, I think very bearish to a bit. The extreme of the high, which is over here, Sunday, 2200. So week 22nd of February, we are bullish, weirdly enough. And the low was formed 66 flat. Tuesday, 10 a.m. And this looks like it's close, pretty close. Small candle. Okay, prior week. We are bearish. The high was formed at the open. Literally at the open. Okay. Here we are bullish. The low was formed at the open again. So here we are bearish. So the high, this is 18747. Okay, this is higher. Sunday 2100. Whoa. Is that the one I just did now? Make sure. It is. I think I have a quicker way here. So this is 25th of January. The week of this is bullish, so we look for the low. Right here, 1.18349, 364. Monday 80800. Okay. It's probably easier to just do it like this. And because we've written out for bullish or not, we can just use that. So here's The low is at the open again. Week before, we are bearish. The high is 0800 Monday. Week before, we are bearish. The high is 0200 Tuesday. Week before, indeed bearish. 17891. Monday 0400. Definitely bullish. The low. There's like I keep skipping over one. 1800. One second. Yo, Lisa. 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 You ordered something inside the door. So my sister ordered something. She's on the phone. Cool. I say, yo, you got food at the door. She said, oh, can you get it for me, please? I was like, fine. Gets it. Answer the door, put it in the kitchen. As I'm answering the door, put it in the kitchen, what do I hear? My sister's footsteps coming down the stairs. Anyway, we are on the 14th of December. So that means you've done this one. So let's go to the week before. This is bearish, and the high is Tuesday 10 a.m. which is 10, yep, just 1000. Okay. And then the week before, 7th of December, the low is Tuesday 1000 again. And the week before, we are bullish 5895, 5894. So this will be the low right here. Sunday 2200. Okay, we're nearly done. We have 4 more. Check that later. Low is 1900 Sunday. November 16th. Bearish. The high is 1800. Sunday. 11th of November. Surprised let me go this far back on the hourly time frame. We are bullish. The low is 1200 Monday. And the last one. Interesting, we're actually bullish here. The low is 900 Wednesday. So, going over the second batch. Monday, Tuesday, Sunday, Tuesday, Sunday, 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 Monday, Sunday, Monday, Tuesday, Monday, Sunday, Tuesday, Tuesday, Sunday, 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 Monday, Wednesday. So I did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. I did 20. And only one of them was on Wednesday. Everything was before Wednesday. The extreme was created. Wow. So you could almost always just hop on the markets by Tuesday, look at the weekly time frame, and from there you know if you're bullish or bearish. This is a sample size of 36. Remember, we want 100. And this is Euro USD. So we've gone through the month of July, May. We're currently still in July, so we still have to have some leeway there. So July, May, April, March, February, January, December, November. So we'll continue that later. So October, September, August, July, June, and then we'll go back again. June, May, April, March, February, January. Cool. I know what I want to do. Rather than putting it in the slides, put in Google Sheets, I mean. Can we also go to live? Okay, we didn't trade below it. We haven't traded below it yet. Oh, wait, need to go to this. Come close to it. We need to take it out. This is good though. We are. Looks like institutions are somewhat involved. I don't think they're heavily involved. I think they're just adding some orders because they're going to be taking out some of these buy side liquidity. Pretty nice. I don't want to go further than this because it should potentially hit this and go back down. So just add a low right here. I think we're about roughly 1-to-1, almost, not exactly. This is a 1-to-1 right here. 1 to 4.5, not bad. Okay, so here we want to type in week. And after week we go direction. And then sesh extreme. Because it could be a low or a high. Don't tell me my sister ordered something else. Wow. Wow. Okay, so starting from the 12th of July. 26. Ow. Okay, it's come up into this bullish candlestick here. So we should see rejection. If it comes above, like you can see here, we came up into this candlestick, rejection. Came up into this bullish candlestick, rejection. We've come up into this bullishness. It should not go above here. If it goes above here, we can just come out of trade. And then of course we want to send alert for when price takes out this low right here. Goes above here. Let me actually set it a little bit lower because sometimes price can move quickly. Let me just set it above about halfway. Cool. So 12th of July, 26, 5th of July, 26, 28th, June, 26, 21st, June, 26. Is there a way to, do you think it will be able to, it can only go forward. I've got an idea. So it's 36 total. So 20 minus 1, 2, 3, 4, 5. 36 minus 5 is 31. 31 plus this is 42. So we start from here. Go to the lowest time, which will be 4th of November. 25. Then you have 11th November. 25. That should now be enough to okay, 16th November. 25. 23rd November. 25. I don't know why I keep doing that. Should be enough sample size now. Okay. That's so weird. Alright, just got to do it manually. So if you go up, it goes backwards in time. Go down, it goes forward. Bruh. We'll just do it manually. So for June 26, 31st of May, 2026. 24th of May 2026. 17th May 6. 11th May. What? Oh, I got it wrong. Not 11th. So I was doing it mentally because rather than looking up and down. 26th of April. So 7. Mm, 15. Okay, I need the page flipped. 22nd of February. After all the years. Twenty-eighth, 2025. Oh, it means our previous calculation was incorrect. I think we need an extra couple of spaces. Just the one actually. Okay. Bullish, bearish. Maybe we can copy one. There's more. For a quick glance. For now, there's more bullish. Oh, perfect. So bull, bear, bull, bear. This is not even like the most important part. It'll be this bit that's the most important. Oh my gosh, that's gonna take forever. Bearish. Bullish. Bearish. Bullish. BE. BE. BU. BU. BE. Bullish. 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 Bearish. one we didn't do. Let's go back and do that. Bullish, bearish, bearish, bullish, bearish, bullish, bearish, bullish, bullish, bearish, 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 bullish, bearish, bullish, 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 bearish, bullish, bullish. Okay. Okay, so I need to go back to 22nd of March. Monday 4, yeah. So this is chilling. Need to drop. So the way I wrote it down, it's like this. Tuesday, I've lost Tuesday, Thursday, Monday, Thursday night, 19th of April, yep, 1900. Sunday 5. Monday 08. Sunday 17. Wait. 200. Monday 8. Sunday 5. Monday 8. Tuesday 2. Tuesday 10. Sunday 22. Sunday 19. Sunday 18. Monday 12. Uh-oh. Wednesday. Wait, what? We're missing like loads. So Wednesday, Monday, Sunday, 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 Tuesday 10. Drop that down. Tuesday 10. Oh, but Tuesday, Tuesday. Okay, 10 10. Sunday 8. Monday 4. Euro USD. Okay, perfect. That took way too long. Okay, but the general themes I can see right here is by Tuesday. So one, like probably do it. So before Tuesday, that's what I'm currently gonna do. That looks so weird. So Sunday and Monday basically. Where's the count? 24 out of 36. Probably better just to do grammatically correct. Everything but Wednesday. Oh my. Oh my. 32. It's because it's not 36. It's 37. That's why I got the one wrong. I didn't count for it being 37. Whoops. So yeah, 86% of the time, by Wednesday midnight, we've formed the extreme. By Tuesday, about 2 and 3. There's a 20% chance. By Wednesday, we formed it. By Thursday, so 1, 2, 3. 1, 2, 3, yeah. That'll be 35. What's percentage? 95% of the time. So basically Thursday, Friday. But here's the thing, you got to be careful because what Thursday, Friday doesn't mean that just because we formed the low already, it doesn't. Oh, okay, good. Yo, that sounds disgusting. But just because it's formed by Thursday, it does not mean that you can start buying it. For example, let's say we're bullish, right? Or let me use an example as Thursday. So here we're bullish, right? We created the low of the day on Thursday, the ultimate low. So that means from Thursday to Friday, we went up and closed. So there's a 5% chance, right? But Thursday, you will continue going higher, even on the bullish day. On a bullish day, rather. On a bullish day, is 5% chance that you're gonna go higher. From Tuesday, it's a 66% chance that you're gonna go higher because you've already formulated the low. So there is a 34% chance that Sunday, Monday, you've created a low. So if you wait till Tuesday, so that means Wednesday is probably the best time, right? Wednesday, you should start seeing the price make its decision. And what does that happen? Wednesday, we made a decision. So really and truly, the best trading day would probably be the Wednesday itself, which makes sense, right? It's the middle of the week. People that, yeah, it's just the middle of the week. You have 2 days of a manipulation on the left-hand side, 2 days of deliverance on the right-hand side. I like this. So on a Tuesday, when I wake up on Tuesday, there's a 20% chance that price, if it's bullish, right, there's a 22% chance that price is still going to go down. So I'm better off assuming that price is going to go up. Sure, if I'm wrong, we can go again on Wednesday and potentially Thursday. It's an 8% chance that goes up. Was eye-opening. So by Tuesday, Wednesday kind of time, we are primed for really and truly entering. So Tuesday, Wednesday is kind of where you want to be, like getting ready to see, okay, price is going to go my direction now. Interesting. Now we got the trading below the lower low. So now we're confident that this is going to continue further. If we look to the left-hand side, go to larger time frames. You can see here that we have this fair value gap right here. This blue. You can see we're here, we've nearly filled it completely. The bottom of this area right here would be the area of which is the bearish candle, which you should expect bullishness from. So you can take some partials here, which I'm actually going to do right now. close a quarter of it. Potentially set to break even. I do expect a reaction from this level here. Okay, well, Thursday it's 3 p.m. So that would mean lunchtime's around here. We shouldn't. I think we can safely set our stop loss to break even. 4574. But I would like to know if price comes up to here. $2 billion points. So going through these, I think what's interesting is that the days where it's like Thursday, Wednesday, Thursday kind of thing where we're setting the bearishness, it could have been like bullish up until Thursday, and then we came up, hit our target, we're done for the day, and then because we've now hit our target, we start going downwards, and it happens to just move, deliver further. So if I go to 5th of July, let's have a look. It's right here. So we have it that we're bearish. Okay. So come down into this order block right here. Push up. Deeper. That was kind of consolidation a bit. So let's say I probably would have been bullish here. Created a low here. I think that's valid. Shift, swing high. Would have been looking for pullbacks into here. We did. Pushed up. Didn't get past here. Dropped. I would have been buying here probably. We created a low. Are we still bullish? Probably. Let me try again here. Didn't get past here. Try again here. Somewhere, I guess. Could be bullish, but didn't really give us opportunity to get in. Dropped. If we're still bullish, could probably get in. Maybe here. There's news bit by bit. All right, ladies and gentlemen, that is all for today. Successful session. It was a 2-hour session. Went through some history. I think since 37 options, we a third of the way there. We're going to keep track of this and see when we have a larger sample size. We'll do on multiple different time, multiple different instruments, GU, and we'll expand it further onwards. We're going to get 1,000 done overall, 100 per. So 100 for EU, 100 for gold, 100 for NQ, anything I'm interested in, and I'm going to compare and do an overall one, and then I'll have a figure ready and available so I can start saying, you know. Right. That's all for today. I don't expect price to go above this order block right here. This is a fair value gap. It can come up, but I don't want it to go above semi-stop loss to break even, just in case I miss it. But I send an alert to the red line. If it does come up to it, I would expect institutions to get involved. If they don't, we'll probably just exit it. If that looks like price trades above it quite cleanly and holds above, I'll probably be out. But I've closed partials here. This is that black line, which is that order institutional potential order flow, which could be where price starts to go up from. I expect it to go down, but it could go up. But we have taken some large liquidity, so that's why I'm bearish. And then, of course, just going to monitor every time it touches a key area. So let me actually send a alert below. And then I've got my phone on me. And you know what we do? We close the markets. Over up or down, we just close the markets. And I'm going to go and relax, eat. I haven't eaten properly yet. And I believe Arsenal just signed Christopher Zolis. So I will be checking up some Twitter posts. 2-hour stream. We'll continue tomorrow. Love you guys. Peace. It's been your boy CJ. Take care.